Hey guys, welcome back to the channel. Hope you're having an amazing day. 2 days ago, we saw Bitcoin retest the short-term holder cost basis right around 114K and got rejected from that level. And before we jump into the video, I just want to mention that, yesterday's video wasn't released because I've been working extremely hard on the website and on this to get you guys some new charts. And I'm also adding TradingView indicators so pro users can access the on-chain data directly from TradingView and get alerts, etc. And also the public API on the website is also underway and will be available in the very next update, alongside a bunch of derivatives data, some more on-chain charts, and some more on-chain Ethereum charts as well. So stay tuned for the next week or so, and everything should be out. So let's dive into the charts now. Now, today I want to discuss an important idea that has happened pretty much twice this cycle so far and twice last cycle, and has happened in the past too. Historically, every time Bitcoin has got rejected from the short-term holder cost basis, right? So historically it breaks below after the short-term holder cost basis, and breaking below it, we retest a very specific support level, which is the negative 0.5 standard deviation band. And we've seen this happen in the pullback from around 109 to 75. We hit this level right here at around 74K, and we bounced pretty much off of that level. And we also saw it when we hit from 72 to around 50K, we bounced pretty much off of this level. It's basically the standard deviation bands between the short-term holder cost basis. So if we take the standard deviation and we map out these bands onto the price, we get these sort of levels that match up to the short-term holder cost basis, right? So that's currently sitting at around 91K. And so I don't think necessarily we have to go that low to have, a material return back to the upside. But with some of the on-chain metrics starting to roll over, I thought it'd be prudent to sort of go through the on-chain data today on the website and see what the data is telling us. And so we've sort of still been in this consolidation range that I've been discussing on the videos, roughly around 105 to 115K, and Bitcoin's currently trading around 108. So sentiment's been pretty low. People are getting impatient, frustrated, classic consolidation behavior. And this is pretty much what we've seen in prior sideways action events for Bitcoin, right? So 2 days ago, when we saw that test of the short-term holder cost basis at 114, and that's the average acquisition price of everyone who bought Bitcoin in the last 155 days. So short-term holders, right? And that got decisively pretty much rejected off of that level. And throughout Bitcoin's history, when we break below the short-term holder cost basis, as we've seen in 2021, we always retest these lower sort of levels down here. We saw it in the summer of 2021 in the actual bull market peak. We broke below it around 53K, and then tested that level at 41K, had a pretty big bounce back up to the short-term holder cost basis, and subsequently got rejected. And then we sort of bounce back and forth between these levels until we see sort of a return back to profitability as short-term holders start to see more profits, and overall the on-chain data starts to return back to normalcy when these levels sort of get broken through and the bull market goes underway, right? So we saw it in 2017 as well, right? So when we hold this level all throughout the bull market, and when we essentially break below it, we see rejection off of these levels and retests, and then rejections, and then we essentially hold it as rejection, as resistance, as the entire way down in the bear market. And so these bands, right? So these bands for the MVRV are actually pretty important too. So MVRV measures the market value versus realized value on chain. So basically comparing price to what the current price to what everyone paid for their coins. And so these standard deviation bands basically show us how far we are from historical fair value. So the mean here at the zero standard deviation, is currently at around 101K. And so let me just turn some of these off to show you. Okay, so Currently, that's sitting around 101.3K. So that's the baseline fair value, right? The MVRV zero standard deviation. Interestingly enough, the short-term holder cost basis at around 0.25 standard deviation, negative 0.25 standard deviation, is typically where we see the price get to when we break below the short-term holder cost basis first. Well, obviously it's the first band we get to when it breaks below. So we saw this in the pullback here. We first held this level as sort of support. We broke below it a little bit and then retested the short-term holder cost basis. We couldn't hold it and we basically rejected off of that level. And then only then did we go below and retest this lower band here. And we saw this again back in 2024 when we went below it a little bit, the negative 0.25, this gray band here. Retested the short-term holder cost basis at around 60 to 69K. And then only then we dropped below and got into this lower level here. And so the negative 0.25 band is sitting at around 102K, which is also where around the same levels as the MVRV average band is currently at 101.3. And so I'm not saying Bitcoin has to go down to these lower levels here, so 91K. But I do think if we test 101, 102, 103, that could be a pretty big line in the sand, especially because that's where the MVRV is lining up. And we've seen this level act as support throughout this entire bull market. And we saw it somewhat in 2021 as well. When we broke back above it, we saw a return back to profitability. As the overall market sort of went back into bull mode, and when we saw an all-time high at around the MVRV +1 standard deviation. And we've also seen the MVRV +1 standard deviation band act as sort of resistance for more local maximum tops in Bitcoin's price. We saw this at 72K, at 101 to 106K. And we actually didn't see it hit those levels back in July of 2025. And so my honest opinion, I think Bitcoin is going to continue sideways from here for quite some time before we get any real action to the upside. And that might mean, testing these levels at 101. It might mean briefly dipping below to 91, even though honestly, I don't know if that's going to happen or not, but it would be healthy. And that's what we've seen in prior pullbacks, right? So that's what consolidations are supposed to be and what they're supposed to do. The market it needs to shake out these weak hands. It needs to go both up and down and frustrate everyone and make people think the bull market's over. So they sell and make other people think that we're about to go to the moon. So they get caught offside, right? That's how bottoms are built. And so sentiment is pretty much decreasing right now. People are getting nervous, and that's exactly what we need to see, in my opinion, before we get the next leg higher. So when everyone's euphoric and calling for Bitcoin to hit 200 to 300K, that's when tops start to form. And when on the flip side, when everyone's uncomfortable, like right now, that's when bottoms can form. So if you're feeling frustrated, if you're bored, if you're second guessing your own thesis, you're probably right where you need to be you're probably right where you need to be emotionally for this to work out. I personally hold 70% Bitcoin, 30% Ethereum. That's it. No other cryptos. And the reason behind 70-30 is simple. I think Bitcoin will outperform 99% of all other cryptocurrencies over any meaningful time frame, especially in the long run, right? It's the most decentralized, the most secure, the most liquid, the hardest money ever created, in my opinion. There's nothing else like it. And in previous cycles, the strategy was to identify these overheated territories, sell 100%, right? And sit in stable coins, wait for the bear market and buy back lower, right? I'm personally not doing that anymore. At least I'm not selling 100%. Why? Because Bitcoin is simply, in my opinion, too good of an asset to be completely out of. Yes, I do think we'll see a 2026 bear market. I do think we'll see a lot of these key on-chain levels start to roll over while we get into 2026. Yes, I do think there's going to be drawdowns, but I also think volatility to the downside is diminishing as well, in that Bitcoin is maturing as an asset overall. So a 70% drawdown like we saw in 2022, 80% drawdown like we saw in 2018, I'm not as convinced we'll see that sort of magnitude drawdown again in the cycle, perhaps 50%, maybe 60, 65%. And so my strategy now is, when these on-chain indicators start firing off, for example, when Nupal or these other metrics like long-term holders start to distribute or reach euphoric territories, yes, I'll be taking some profits. Maybe I'll go from 70% to 40% Bitcoin, but I'm keeping a sort of core position, right? Bitcoin has a fixed supply. No one can change that. Not governments, not developers, not miners. Other assets like stocks, bonds, real estate, other cryptocurrencies either have increasing supply or centralized control that can basically change the rules, right? So when people ask me, why not diversify into more altcoins? Why not, trade more? This is why, because I've realized at least that constantly trying to outsmart the market, constantly trying to catch every move often leads to just underperforming the best, asset, right? So what am I actually watching right now to stop, rambling? What would make me change my thesis at least for the bull thesis, right? So first of all, the MVRV average at 101K, obviously, as long as we're holding above this, the bull market structure is intact, in my opinion. If we break below it and can't reclaim it as support, especially if we drop below to that 91K level that I talked about previously, and then can't bounce above, that would be the first sort of warning sign. Secondly, if we can't, basically reclaim the short-term holder cost basis at 114K, that's when I would start to reconsider. So if we get rejected from it, the question is, do we try again in a few weeks and successfully break back above, or do we keep getting rejected from it like we saw in 2017, like we saw twice in 2021, right? So in 2022 we got rejected again. So thirdly, there are some momentum oscillators on the website that are currently trading to the downside, such as the MVRV momentum. We're currently seeing actually a bearish divergence play out on the MVRV, wherein the actual MVRV ratio has been putting in lower highs, whilst Bitcoin has been putting in higher highs. But we're also seeing sort of higher lows play out as well. So overall, currently, the momentum is facing towards the downside. But if we can get above these sort of levels, that's definitely something to watch for on the website. Currently, I'm looking at it on a shorter term time frame, but if you look at it on a 1 year basis, it's still sort of seeing this downside momentum. And this is just one metric, right? So fourthly, I think looking at the supply and profit versus loss. So currently we're sitting at around 80% in profit and around 20% in loss. So if this flips dramatically and we start seeing 35% or more in loss that we've seen in prior bear market beginnings, that can sort of signal that we've entered a longer term bear market. And also a good sign for market cycle bottoms is when we get above 50% in loss. So over half of holders on chain are in loss. That has always historically marked these major market bottoms for Bitcoin, right? So we saw in 2022, 2018, and all prior cycles. So that's something to watch for. So lastly, long-term holder behavior. So if we sort of zoom in on the short-term holder versus long-term holder supply here, long-term holders have been sort of slowing distributions for the past week or so, and they've remained relatively flat for the past couple of days. If we look at the net position change of long-term holders, we actually have been seeing an overall net accumulation for the past since 19th of October towards today. So we've seen these sort of overall net accumulations in these longer term, in these lower term time frames here. So for the past 4 days, that's where at least we're seeing long-term holders not selling into this pullback, which is a relatively good sign in my opinion. They're sort of accumulating a little bit here, not by much obviously, but a little bit. So to sum up everything, I'm personally watching the 101K MVRV mean as a line in the sand for the bull market structure, and the 114K short-term lower cost basis as the level that we need to reclaim to confirm the next leg up, and 91K as a potential low if we retest that 101K MVRV and start to go lower, as we've seen in prior pullbacks, right? So the truth is, if you're a bull, in my opinion, you should probably be hoping something in the middle plays out. So where we're gonna sort of chop around here for a while longer, potentially test these lower support levels, shake out weak hands, and then eventually resolve to the upside in either Q4 or very early 2026 at the latest, in my opinion. If you're of the opinion that the bull market is over because of the the 4-year cycle theory, you should probably be expecting we break down into the bear market earlier than what I've talked about in the video. So it depends on what you think is going to happen. And the best plan is the one you stick to. For example, if you're up 10x on your Bitcoin positions, then yeah, it could be a good time to sell into strength on the next leg up. But if you're holding, if you have a longer term horizon like me, 5 to 10 years, then it's probably it is a different game entirely, right? So either way, my conviction personally as for Bitcoin as an asset hasn't changed. The real strategy for me is just to hold the best asset, take some profits when things get crazy overheated, and maintain a core position long term. So stay patient, watch these key on-chain levels, try not to use leverage, guys. And all these charts are available for 100% free on chartandspec.com. You can track them yourself, verify the data, make your own decisions, and I hope to see you in the next video. Thanks for watching. Bye.